Okay, welcome to the class. My name is Abubakar, and I'm your tutor for this subject, Strategic Business Reporting. So let's start the introduction of the paper which we're going to study. The paper is SBR. SBR, Strategic Business Reporting. If we discuss the journey of SBR in ACCA, in ACCA, we have in a foundation level a paper which is known as Financial Accounting F3, and it is a paper of foundation level. After the financial accounting, we studied financial reporting, also known as F7, and this paper was at skill level of ACC. Now, after the financial reporting, the final paper relating to this stream is SBR. Strategic Business Reporting. In old scheme, it was also known as P2 paper. And this is the professional level paper of ACC. So you can say SBR is the final paper of accounting or relating to accounting in ACCA. So the basis of ACCA SBR paper, starting from financial accounting, then financial reporting, and now the final paper, SBR. Now keep one thing in mind, whatever we have studied in financial reporting paper, whatever we have studied in financial reporting paper, it is still equally relevant in SBR. Like IAS 16, 23, 37, IFRS 5, IAS 40, cash flow statement, ratios analysis, whatever we have studied in financial reporting paper, in F7 paper, it is still relevant in SBR. It will be tested in SBR as well, because the financial reporting is the base of, or is the basis of SBR, Strategic Business Reporting. One more thing, after the SBR, Strategic Business Reporting paper, you are going to study AAA. AAA is known as Advanced Audit and Assurance paper. The SBR is also important for your AAA paper as well, because in AAA there will be a question which will be relating to the accounting standard. So we are going to study accounting standards in SBR. So the standard which we will study in SBR will be relevant. I think at least 20 to 25% of your AAA marks will be dependent on your SBR paper as well. So that is the importance of paper of SBR in ACCA, Strategic Business Reporting. Now, let's talk about the exam. Dear student, the exam of SBR will be computer based exam. It will be a computer based exam, CB exam. And this paper computer based exam will be divided in two parts. Will be divided in two parts. Part A and Part B. In Part A, we will be having two questions, question number 1 and question number 2. Question 1 will be consist of total 30 marks. And question number 2 will be of 20 marks, and there will be total 50 marks available in a Part A exam. The question 1 primarily will be consist of group accounts from consolidated financial statements, discussion about parent and subsidiaries, and some other accounting issues. And the question number 2 will be of accounting issue plus ethical issues. Accounting issues and ethical issues. Okay, maybe for example, your senior manager is asking you to record a provision, but you know IAS 37 does not allow the recognition of such provision. So there is an accounting issue that whether the IAS 37 allow to recognize such provision or not. But there is an ethical issue as well. Because when your boss is asking you to record something and he's intimidating you, and you also know that if you do not follow his instructions, you may lose his job. You have a financial interest in a form of a salary and other benefits. So you are facing an ethical issue as well. So question 20 will be consist of an accounting and ethical issue. We have to discuss such things in a question number 2. So you have total 50 marks in Part A. The Part B will also consist of two questions, question number 3 and question number 4. and each question will be consist of 25 marks, and you have again total 50 marks in part B. The question number 3 and question number 4 will be from accounting standards, accounting issues, and other issues as well. Other issues mean any current issue, a conceptual framework, or other topic like sustainability. We have a recent topic, sustainability, APM, performance measurement. Such topics will be tested in question 3 and question 4. Okay, so you have a 50 marks in a part B as well, and you have total 100 marks, and you need to get first of all 50 marks to pass your SBR exam. That will be the structure of your paper. Now, let me tell you one thing. If you compare this paper from financial reporting, the financial reporting is largely based on calculation. Financial reporting, you need to prepare consolidated financial statement, final accounts, cash flows, ratio analysis. Such things were required in FR paper. But in SBR, you are not required to produce the consolidated financial statement like in FR or a final accounts or a cash flow statement. This paper largely will be requiring discussion, explanations of a given accounting issue. There will be a case study, and the requirement would be that discuss or explain the accounting issue in the above case study. So it is more descriptive question. Out of 100, at least 70 to 75 marks will be dependent on discussion and explanation. Yes, 20 to 25 marks would be dependent on calculation, but the large numbers will be dependent on your ability to discuss and explain the accounting issue in a given case study. So to some extent, you can say it is more like a theoretical paper. But remember, it is not a conventional theory. It is a conceptual theory. If you know that what is the treatment of investment property, then if there is any case study on investment property, then that would not be an issue for us. That if there is any wrong treatment going on investment property and you know the IAS 40, you can easily discuss. But you have to discuss, you have to explain. So we need to create that ability in SBR to explain and discuss the accounting issue in a given case study. And obviously, we will do it during our practice session. But that would be the difference between of exam style between FR and Strategic Business Reporting SBR. Any question? Everyone? Okay, now, as I told you that this paper is going to be a computer-based exam. So let me show you the exam paper. So we have the idea that how we are going to be tested. So this is the exam screen section A. Now, this is how the question will appear to you in your exam. You are looking at the exam screen. On the left side of the screen, these are exhibits. These are exhibits on the left side of the screen. And this is the initial introduction of the paper. On the right side of the screen, you have the initial introduction of the paper with the question which we are going to learn, which we are going to answer. Now, exhibits mean in a simple word, exhibits mean the parts of the question. Now, here in this question number 1, we have 4 exhibits. That means we have 4 parts of the question. First part is relating to initial recognition of G company. Second is subsequent acquisition of G company. Number 3 is about the fair value of the net asset of the G company. And then we have a draft consolidated statement of financial position. Then we have requirements. Now, each exhibit has its own unique requirement. Each exhibit has its own unique requirement. Like in the first requirement, he is asking using exhibit 1, using exhibit 1 only. So the examiner is specifying that which exhibit should be used to answer this requirement. Similarly, if you look at the second requirement, again using exhibit only 1. In a B requirement, using exhibit number 2. In a C requirement, again using exhibit number 2 only. In a C2, using exhibit number 3. And the last, using the pre-populated spreadsheet, the draft consolidated statement of financial position. So each exhibit has its own requirement, Okay. And then you have response option. In this question, you have 2 response options. One is word processor, and the other one is a spreadsheet. Other one is a spreadsheet. Now, you will click the first exhibit. The first part of the question will be open. This is the first part. You have read it, what is written in this part. Then you come to the requirement. And you will read the requirement relating to this exhibit, and the requirement is using exhibit 1 only, discuss, focus, discuss why G company should classify it as associate, not as a subsidiary. So as I told you, in SBR, the requirement would be about the discussion. So when you have to discuss something, for discussion purpose, obviously, you cannot use the spreadsheet. You cannot use the spreadsheet for discussion. For discussion, you have to use the word processor. Whenever there is a requirement about discussion and explanation, you will be using the word processor. And if there is any calculation involved and it is a minimal calculation, you still can do it manually on a spreadsheet. Okay. So just keep in mind, for discussion purpose, you will use the word processor. Yes, if there is a requirement to explain and calculate, then you can use the both spreadsheet and word processor. The calculation will be done on a spreadsheet, and the explanation of that calculation will be done on the word processor. Then when you're done with this requirement, then you will go to the second exhibit, you will read it, and then you have a requirement related to that exhibit, and so on. And this is the question number one, and it is mainly on consolidated financial statement. And then there is a draft statement of financial position. This is known as pre-populated financial statement, which is given you, and it will be given in an exam. This is a pre-populated financial statement, and the requirement relating to this pre-populated financial statement would be using pre-populated spreadsheet response option with Exhibit 3 and your previous answer, adjust the spreadsheet prepared by the director of CCOM. So the director of the company has prepared this spreadsheet. You can see in a requirement option as well. This is the spreadsheet, balance sheet, which is prepared by the directors of the company. This area. Okay. And you have answered Exhibit 1, Exhibit 2, and Exhibit 3. And there are some requirements. You are required to adjust these values with those adjustments, because in the balance sheet prepared by director, there will be some mistakes, there will be some missing value. So you have to identify, you have to adjust those values, and you have to calculate the correct value of the balance sheets, correct value of the assets, goodwill, and so on. And it is already done. As you can see, this is here you have been given with the pre-populated sheet in this area, and here we have adjusted these values, adjustment, and these are the adjusted values. We will learn this during our practice session, but this will be a unique requirement in the consolidated financial statement, question number 1. And this part will be only consist of calculation, numeric part, and the total mark of this is 12. And this is the only requirement which is only consist of calculation. Other than this, you will find in every requirement there is requirement of discussion and explanation. And this is your question number 1, and it is consist of total 30 marks. Then when you are done with this question, you will move to the question number 2. And this is the question number 2, which is relating to an accounting issue and the ethical issue. Again, exhibit related party transaction. It is an accounting standard. Subsidiary value adjustment, goodwill impairment calculation. We have 3 exhibits in this question, and again, each exhibit have its own requirement. The first requirement: discuss the ethical accounting implication or directive suggestion from the perspective of the reporting accountant. From the perspective of the reporting accountant, we need to discuss the accounting and ethical implication of the director's suggestion. So, as I told you in this question, you need to discuss the accounting aspect and the ethical aspect as well. And in this question, you are given with only word processor, because in this question, you are required only to discuss and explain. So you will be given with word processor only. So you will use the word processor response option and you will write your answer. This is your answer sheet. This is the question number 2, and 30 and 20, you have total 50 marks here. Then you have part B. In part B, you have 3 questions. Again, vehicle, land, exhibit, mixed measurement approach, requirement, and response option. Again, word processor only here. And similarly, the question number 4, financial statement extract. You have requirement, and here you have word and spreadsheet, because in some requirement you need to calculate. Discuss and calculation would be involved. So you are given with the spreadsheet as well in this requirement. So that would be the exam screen, which you have to use to answer the question in final paper. Okay. and that is a computer-based environment. Got it? Any question? Okay. Now, one more thing. You have total 100 marks in SBR. Out of 100, 80 marks will be relating to technical knowledge. 80 marks will be available for technical knowledge, and 20 marks are professional marks. The marks which do not depend on your technical knowledge. But these marks depends on that how you have answered your question. The way you have answered your question. It depends on your communication skills, which you will use in answering the question. It depends that how you have presented your answer. Okay, how you have presented your answer. It depends on professional skepticism which you have used in your answering the question. So 20 marks will be dependent on professional marks and 80 marks will be on technical marks. So when we will be answering the question, we will take care that we will answer the question in a way that we get these professional marks as well. These professional marks as well. We will learn this thing, okay, during the exam practice as well, in the exam practice. But keep in mind, 80 marks will be based on technical knowledge and 20 marks will be based on professional marks. Like for example, if in a requirement it is required to report to the director, then you answer the question in a style of reporting to the director, subject your findings and how you usually end the report with your name and your designation. So these are the professional marks, okay? And other factors are also involved in professional marks. We will discuss it later on during the practice session. But 20% marks of your exam will be professional marks and 80% will be your marks which depends on your technical knowledge. So that is the exam pattern of your SBR exam. Now we discuss the course plan. Okay, it is June 25 session. 12 January is the starting date, and this is your course plan. You can say the study plan, which we will follow in class. The first class or lecture 1 is Introduction to Syllabus. In this class, we will discuss the paper pattern, and we will start the class with the topic of provisions, contingent liabilities, and contingent asset, which is IAS 37, asset held for sale, discontinued operations, and borrowing costs. So these were the topics which we will try to cover in the first class. Okay, that is a plan. It doesn't mean that we will complete this topic in the first class. It may take another class. Okay, that is a plan. That lecture one will be start from here. Okay, then after that, when we complete these topics, we will be doing IAS 16 property, plant and equipment, IAS 40 investment property, government grant, intangible assets, impairment, IAS 36. Okay. Now you can see in the first two lectures, all the topics are those topics which you have studied at FR in financial reporting. Okay. These are the topics which we have covered in financial reporting. So I told you in the start of the class that SBR marks depend on the knowledge of FR as well. And let me tell you, about 30 to 35% of your SBR exam will be dependent on your previous knowledge from financial reporting, FR. I'm just telling you the importance and the significance of the FR knowledge in SBR. Okay. So these topics we will cover in a second lecture. Then we have planned to cover accounting policy, IAS 8, events after reporting date, IAS 10, and then we will cover segment reporting. Now, segment reporting is a new accounting standard. This accounting standard you haven't studied in FR level. This is a new accounting standard, IFRS 8. And then a related party, IAS 24. This will be the new topic. And fair value measurement, IFRS 30. So from here, we will be starting the SBR topic. Segment reporting, related party, and fair value measurement from lecture number 3. Now, let me tell you about the segment reporting. Segment reporting means, like, for example, if you talk about the Samsung company, Samsung Incorporation, Samsung produce mobile phones, laptops, electronic items, and many other things, home appliances as well. So each product is their segment. So being a user of the financial statement of the Samsung Incorporation, I'm not only interested in their overall financial statement, I also interested at how the mobile segment, how the laptop segment, how the home appliances segment is performing on their own. So for that purpose, to fulfill that need, we have a segment reporting, IFRS 8, that we divide the financial statement into different segments as per their products. And that is known as segment reporting. So we will learn that thing in IFRS 8. Then we have related party transaction. Related party transaction means directors, parents, subsidiary, associate companies are the related parties of the company. And related party transaction means that they sell or purchase with the related party. Now, the existence of the related party relationship means the transaction with the related party might not be on fair value basis, on a fair basis. So it is mandatory for listed company that whenever they do a transaction with the related party, they must disclose that transaction in their financial statements. Then we have IFRS 13. IFRS 13 is about on the measurement of fair value, that how fair value should be measured for asset and liabilities, guidance available in IFRS 13. Then we have IFRS 15 in lecture number 4. IFRS 15 is about revenue recognition, revenue from contract with customer. IFRS 15 we will be doing. And after doing this topic, we will have a test number 1, which we will conduct from this area, which we have learned in 4 lectures. But again, telling you, these are the 4 lectures, but it doesn't mean that we will be able to complete this in 4 lectures. Okay, it might take more time. Okay, it depends on the in the depth in the depth in which we cover the area, the practice, how much we do practice. So it may take more time. It may take 6, 7 lectures instead of 4. Okay, so instead of saying lecture, you can say these are the sessions. Session 1, Session 2, Session 3, and Session 4. Session maybe consist of only one lecture, or it may take 2 or 3 lectures as well. Okay. Then we have, after doing this, we have employee benefit, in which this is IAS 19. In this standard, we will discuss the accounting treatment of the employee benefit like pensions, provident funds, salaries, profit sharing schemes with the employees. These things we will be discussing in IAS 19. Then we have share-based payment. It is IFRS 2. Share-based payment means sometime entity, instead of paying the consideration in a form of cash, the company may issue their equity instrument to the supplier of the goods and services. That payment is known as share-based payment. We will discuss this in IFRS 2. Then we have IFRS 16. IFRS 16 is about the lease contract. Lease we have covered in F7 as well, but in F7 we have only discussed lessee accounting. But in IFRS 16 in SBR, we will be covering the total IFRS. Every aspect of IFRS 16 will be covered. Okay. So after IFRS 16, we will be doing financial instrument, IAS 32 and IFRS 9. We will be doing this. And after that, we will learn income tax IAS 12, accounting standard on taxation. These areas will be covered after the test number 1, and these areas are largely on new topics. New topics mean the topics which are new in SBR. We haven't covered these topics in detail in FR level. Then we will conduct the test number 2, and after the test 2, we will start the group accounts. We will start from basic group accounts, basically consolidation, in which we discuss IFRS 3, IFRS 10, then joint ventures, IFRS 11, accounting for associate and joint venture, IAS 28. Then we will discuss the advanced business combination, which is known as step acquisition and disposal of subsidiaries. We will discuss then Forex IAS 21. Forex IAS 21 means if you have any foreign subsidiary or foreign associate with a different functional currency. Then we have consolidated cash flow statement. So this area will be covering the group account. And then we will cover the other areas, APMs, alternative performance measurement, current issue. In other areas, we have sustainability reporting. In other areas, we have accounting standards for small and medium enterprises and any other current issue if available on that time. Okay. But let me tell you, the other areas will be covering 10% of your exam, 5 to 10% of your exam. And 90 to 80% of your exam will be from accounting standard and group account. So that's why I keep these other areas at the end, at the last of the session. Okay. So that would be your course plan. And this is an tentative plan. Actual pace may be affected by the comprehension of the topic by the student or by the speed of the lecturer as well. Okay. So that is your course plan, which we will follow in SBR. Now, any question? Okay. Now, let just give me some insight that anyone in the class who is not from ACC stream, maybe from coming exemption stream, after getting the exemption, starting ACCA? Anyone is out there? Anyone? Okay. There is one student who got the exemption. So, okay. So FR was exempted? Okay. 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 Thank you very much. Level 1 and level 2 was exempted. Okay, got it. Thank you. So now we will start the class with the topic. But before that, we will take a short break. Okay. Take a break for 5 to 10 minutes. And after that, we will start with the first topic. Okay, welcome back. So now we're going to start the first topic, which is IAS 37 provisions, contingent liabilities, and contingent asset. So in this standard, we will covering these three things. So first, we will define certain things in this standard, then we will start it. So first of all, in this standard, we have provision. Now, what is a provision? If we define the provision is a liability of uncertain time or amount. Provision is a liability of uncertain time or amount. Now, for example, if we talk about a warranty, when a company makes a product and sell the product with a warranty, the company knows that there are some products which will be coming back for repair purposes. But how many products will come back and when they will be come back, that is not known. That is basically uncertainty of time or amount. But it is confirmed that there is an obligation on a company that if the product will return, the company has an obligation to repair them or replace them. So that is basically an example of a provision. That is basically an example of a provision. Now, as we are saying that a provision is a liability of uncertain time or uncertain amount, so that means a provision should fulfill the criteria of liability as well. So if we define the liability, The definition of liability is a present obligation due to a past event and will result in outflow of economic benefit. So, provision is a liability. So, in order to be a provision, first of all, it should fulfill these criteria of liability. And the liability criteria is the liability is a present obligation. Now, present obligation means that there is no alternative, there is no option. The entity has to fulfill the obligation. If the company has choices, if company has alternative, then it is not a present obligation. Okay, so first of all, there should be a present obligation. Now, this obligation may be legal obligation or it might be constructive obligation. Legal obligation means the obligation which is due to act of law for the breach of contract, court order, due to any statutory law. Such obligation which arise due to the act of law is known as legal obligation. Constructive obligation means the obligation which is not due to the act of law, but it is due to the company own practices and policies which create a valid expectation in the public that entity will fulfill its obligation. Now, for example, if it is a practice of the company that the company plant thousands of trees every year, then it will become a constructive obligation of the company to plant the plants. Okay, that will be a constructive obligation. If company has a policy that they will give profit sharing schemes or profit sharing bonuses to employee each year, it is not their legal obligation, but it is their policy, that is their practice, that they share their profits with their employees. Then it will create a valid expectation in the mind of the employees that the company will fulfill its obligation this year as well. So it will be a constructive obligation. Now in IAS 37, it doesn't matter that it is a legal or it is a constructive obligation. In IAS 37, obligation will be an obligation, whether it is legal or whether it is constructive. The second thing is a past event. Past event is known as obligatory event. Obligatory event means the event due to which it become a present obligation on a company. The event which create a present obligation today or a obligation today is known as a past event or a obligatory event. For example, it is a present obligation on a company today that they replace the defective unit. Now, in this case, what is the present obligation? What is the past event? What is the obligatory event? Obligatory event is that company has sold a defective unit to its customer in the past, and that selling of a defective unit create a present obligation today that company should replace the item or should repair the item. So that is an obligatory event. So past event is an obligatory event which create a obligation today. And it is mandatory that in order to be a present obligation, there must be a past event. If there is no past event, then there is no obligation. And if there is no obligation, there is no liability. And if there is no liability, there is no provision. There is no provision. So there must be a past event. In other words, it means the future event cannot create a obligation. Future event cannot create a obligation, cannot create a present obligation. For example, the company will train its employees in next year. Now, the training of employee is a future event. It is not a past event. And when we say it is a future event, that means company has alternatives. Company has the choices. One, company can avoid the training, and company can say, okay, we avoid the training, we do not train the employees, we are ready to bear the losses, which we will face due to not training the employees. Now, it is a future event and it creates choices, it creates alternatives. So if you have a future event which create alternative and choices, it cannot create a present obligation. So in order to be a present obligation, there must be a past event. Number two. Number three, it will result in outflow of economic benefit. The liability will result in outflow of economic benefit. So if you have to repair the product, obviously it will require economic benefit. You have to incur some expenditure. There will be an outflow of economic benefit. So that is a definition of a liability. And liability is the mandatory part of the provision. So in order to be a provision, first of all, it should fulfill the definition of a liability. Okay. Then we will see that the time and the amount is uncertain or not. So liability is, so provision is a liability of uncertain time or amount, and that is the definition of the liability which we have discussed. Now let me give you some examples. Example of provision. The first example which I discussed already is a warranty cost. Warranty cost is an example of a provision. Like A Limited sold 100 units to its customer with 12 months warranty. Now here there is a present obligation on a company now on A Limited that if there is any unit out of 100 which has a manufacturing defect and it is identified within 12 months, the company will replace that part or will repair that part. Okay, that is a present obligation. Number one. Number two, past event. Past event in this case that you have sold 100 units with the commitment that we will repair it or replace it if there is any if there is any defective part or unit in those 100 units. And out of 100, there will be 1 or 2 units or 3 units or 4 units which might be defective. So you have sold some defective unit. That is your past event, which create a present obligation to it. And there will be an outflow of economic benefit when 2, 3, 4, or 5 or 6 units will be returned in a coming time and you have to repair it or replace it. So there will be an outflow of economic benefit as well. So warranty is an example of a provision. Now, in this case, the liability definition has been fulfilled, but this liability is not certain. Now, there is some uncertainty in this liability. There is some uncertainty in this liability, and that uncertainty is regarding the time or amount. Now, we have given 12 months warranty. So now when the units will be claimed in 1 month, in 2 months, in 3 months, in 4 months, in 9 months, we doesn't know. Now it is the uncertainty of the time. This is the uncertainty of the time. Number two, amount. How many units will be returned? 1 unit will be returned, 2, 3, 4, 5. That is uncertain. And what would be the nature of the defect? That would be a minor defect, major defect, or we have to replace it. So the amount required to settle the warranty and the time when the warranty will be claimed, both of these items are uncertain. Both of these items are uncertain, and it creates the uncertainty in amount or time. So that's why the warranty cost is a classical example of provision. And that fulfill the definition that provision is a liability of uncertain time or uncertain amount. Another example of provision. Decommissioning cost, which is also known as dismantling cost. Decommissioning cost or dismantling cost is also an example of provision. Now, today you have installed a plant with the expected life of 5 years. But as per law or as per your own commitments or policies, at the end of useful life of the plant, you dismantle the plant. That is, let's say it is by law that you have to dismantle the plant at the end of the useful life. So you are estimating that after 5 years, the company will dismantle the plant, will remove the plant from that area. And it's your legal obligation. Let's say it is your legal obligation. Now, in this case, how much expenditure will be required? That is uncertain. That is certain that you have to remove it. You have to dismantle it. It's your present obligation. It's your present obligation today that you have to dismantle it. There is a present obligation. There is a past event because there is a legal obligation. You have installed the plant, so you have to dismantle it. You have made the commitment. So there is a past event. And when you will dismantle it obviously there will be an outflow of economic benefit in terms of dollars. You have to incur some expenditure. But it is not a liability, but it is a provision. It is such a liability in which the amount or time is not uncertain. Now, how much dollar will be required? We have made estimate that we may require $1,000, but it's not the actual amount. The actual amount will be confirmed after 5 years when you will dismantle it. So in this case, the amount is not certain. Amount is not certain. And one more thing, time is also not certain. It is an expected life of 5 years. It is expectation that after 5 years you will dismantle it. But you may have to dismantle it after 4 years. You may have to you may dismantle it after 6, 7, or 8 years if there is any increase in the expected life. So dismantling cost is also an example of a provision where the entities recognize the provision. Employees has made a claim for compensation of, let's say, $100,000 and file a case against you. Due to any reason, due to any violation of health and safety policies or any unfair dismissal, the employee has filed a case against you for $100,000. The case is going on, but your lawyer told you that there is more than 50% chance that the company will lose the case. More than 50% chance. Your lawyer told you that it is probable that you may lose the case and you have to pay maybe $90,000 or maybe $80,000. It is an estimate of the lawyer, and how much amount you have to pay, 90, 80, or 1 lakh, it will be decided in 6 months or in 8 months or in a 1 year. Now, when your lawyer, you're a professional who has an experience in such cases, is telling you that you are going to lose a case, then it means you have a present obligation. Your lawyer, a professional, is telling you that you will lose the case and you have to pay the compensation. So it means there is a present obligation on you. There is a present obligation on you. And the past event is unfair dismissal. You have fired your employee, and that was unfair dismissal. Okay, that was the past event. And in that result, there will be an outflow of economic benefit in future, which might be 1 lakh, 90, or 80. So it fulfills the definition of the liability. But the amount is not certain. Whether it is 90, whether it is 80, whether it is $100,000, it is not confirmed. It will be confirmed when the verdict will be given by the judge. Till that, it is uncertain that how much amount you have to pay. But your lawyer is telling you that you have to pay the fine. You have to pay the compensation. But how much, it is not confirmed. That is uncertain. And your lawyer is not certain about the time, that on what date you have to pay it. Because it depends when the court will pass the verdict. It may take 6 months, it may take 8 months, it may take 1 year, it may take more than 1 year. So the time is also uncertain. So in such court cases, in such type of court cases, the entities also recognize the provision as per IAS 37. So court case is another example of the provision where the companies recognize the provision. Got it? Any question? Yes, students, any question? Everyone? Okay, so these are some examples of the provision. Now, continue with the provision. We have discussed the definition of the provision. Now, let's talk about the recognition of the provision, that when a provision should be recognized in a financial statement. Now, recognition means when you will recognize a provision in financial statement, when provision will be credited. And relating expense will be debited. Yes, yes, okay, okay. You are talking about the measurement. We are talking about the measurement, that how do you determine the amount of the provision. We will discuss the measurements later on, okay? Okay, it is a topic which is coming later on. We will discuss this thing, that how we will determine the amount. At the moment, I have defined the provision and I give you the examples of the provision. Now I'm going to discuss the recognition criteria. After that, we will discuss that how a provision should be made. So when provision will be recognized? When a provision will be recognized? The recognition criteria of provision is there must be a present obligation due to a past event outflow of economic benefit is probable. And number 3, cost of expenditure can be measured reliably. These are the 3 conditions that should be fulfilled in order to recognize a provision. Number 1, there should be a present obligation. If there is no present obligation, there is no provision. And obviously that obligation due to a past event. As I told you, the future event cannot create a provision. Outflow of economic benefit is probable and cost of the expenditure can be measured reliably. If all these 3 conditions fulfilled, then a provision can be recognized. If any of the condition is not fulfilled, we cannot recognize a provision. If there is no present obligation, no provision. If there is outflow of economic benefit is not probable, there is no provision. Cost of expenditure, if cannot be measured reliably, there is no provision. Provision will not be recognized. Okay, now let me give you an example. For example, let's say you have a construction company and you have constructed a building and the building collapsed. And the effective party file a case against you. Now, in a court, your lawyer take a position that this collapse is not fault of the construction company. It is due to some natural disaster. The company is not responsible for that. Company has fulfilled all the compliances. Company has fulfilled all the rules, regulations. The company has ensured the quality of the structure. Everything is ensured by the company. And the building collapse is a result of a natural disaster. It is not the fault of the company. Now, in this case, the court will order an investigation that, okay, the case should be investigated at what is the fault, whether the company is responsible or the natural cause has caused the damage or the collapse of the building. Now, in this case, it is not a present. There is a past event. The building has been collapsed, but there is no present obligation. That is a possible obligation because Court is not saying that your lawyer is not telling you that you are responsible, but you take a plea that the natural disaster is responsible for this. The company is not. So there is a possible obligation, not a present obligation. Until the investigator find out that you are responsible, it will be your possible obligation. So if it is your possible obligation, it is not your present obligation, you cannot recognize a provision. But if investigators find that it was the fault of the company, that the building has been collapsed, then it will become a present obligation. It will become a present obligation. And if the outflow of economic benefit is probable and expenditure can be measured reliably, company will recognize the provision. Number two, if even if it is a present obligation, it is due to a past event, but outflow of economic benefit is not probable. In that case also, we cannot recognize the provision. Like for example, due to some stress in a job environment, company file a case against the company for compensation. Now, your lawyer tell you it is your present obligation, you cause the stress for employees, your work environment is not appropriate, okay, as per the good working practices. So there is a present obligation on you due to a past event. But your lawyer tell you we have no such examples in a court where the court has awarded a compensation to the employee in such cases. If this is the case, then it means your lawyer is telling you there is a present obligation due to a past event, but outflow of economic benefit is not probable. Outflow of economic benefit is not probable. So here again you cannot recognize a provision, okay, because the second condition is not fulfilled. And similarly, if there is a present obligation due to a past event and outflow of economic benefit is also probable, but how much cost is required to settle the obligation is not reliably measurable. If this is the case, in that case also, you cannot measure the provision. Now, like for example, your lawyer tell you due to a, again, I'm taking the same example, the work environment, uh, there is a present obligation due to a past event, and your lawyer tell you in a history, the court has awarded the compensation to the employees in such cases. And that compensation depend on the how much stress has been faced by the employee. Okay. But your lawyer tell you cannot measure, or your professional tell you that we cannot measure that how much stress has been caused because there is no yardstick to measure the stress. Okay. So if you cannot measure the stress, then that means you cannot measure that how much expenditure will be required to such that obligation. So that means the cost cannot be measured reliably. So in this case, in financial statement, we cannot recognize a provision unless the court awarded the compensation. Because when court award the compensation, then you can measure the expenditure reliably. But till then, you cannot measure it reliably, so you cannot recognize the provision. So in a summary, in order to recognize the provision, you have to fulfill all these three obligations, with all these three conditions. Present obligation due to a past event, outflow of economic benefit is probable, and cost of the expenditure can be measured reliably. If all these criteria can be fulfilled, then we can recognize the provision. If any of the condition is not fulfilled, we cannot recognize the provision in our financial statements. Got it? That is the recognition criteria. Any question? So you got the point still here? Okay, students. Okay. Okay, student. This is our first class, and today I will limit the class till here. Okay. So we have discussed till the recognition criteria of provision. So in the next week, we will continue from the recognition and we will complete IAS 37. And when we will complete the IAS 37, then we will start or do the related past paper question as well. Okay. So thank you very much for attending the first class. Hopefully you have uh, enjoyed the class. Now see you in next week. Okay. See you next week. And one last thing, one more thing which I missed in the start of the lecture about the study material. Now, for study material, I have provided the notes. Notes are with the management. They will upload those notes on LMS. So you can download the notes from the LM, volume 1, volume 2, volume 3. And also a practice exam kit is also I have made available. Okay, so we will use the notes. But other than notes, you can use your ACCA Study Hub. ACCA has also launched its books. So ACCA has also its own books as well on ACCA Study Hub. You can also use ACCA Study Hub to read the study material. Okay, and I will also be I will also using the I will be also using the Study Hub. Okay, so we will be using class notes which will be provided to you through LMS, and we will be using ACCA Study Hub to prepare ourselves for SBR. Okay, these will be the two main sources which I will be using in the book. Other than that, if you want to use a Kaplan, Kaplan is also recommended. Kaplan. If you have Kaplan resource, it is Kaplan is also available, is also recommended. Kaplan is a very good resource. Okay, you can use the Kaplan as well. But in class, I will be using the notes and ACCA Study Hub. Okay. So goodbye and take care. See you next week.